Good afternoon, team. Happy Saturday. Welcome to the members weekend video. Okay, so I'm going to try to be as concise as possible. This is going to be a going over what I see in the market like normally do. I'm going to go over the filtered watch list one by one. The 36 stocks that my list came up with, that my scans came up with, and then the filtered version fine-tuned it to only 36. So you're going to get that list in the email attachment along with the link of the video. And I haven't gone through them yet, so I want to go through them on the video so I can kind of get the raw assessment I want to see real quick. It'll be I'll go through them as quickly as possible. And then I also a buddy of mine gave me a thought on NVDA. He was seeing something on the weekend on the weekly chart. So I want to go over it. It's not my idea. It was given to me, so I'm gonna kudos to him for looking at that. So I'm gonna go over it, see kind of like a case study kind of scenario, see what I see, and then dig a little bit deeper into it beyond the weekly chart that he originally is looking at. So without further ado, the S&P. We broke the 50. The red line here is the 50. Let me get to my little things here. That's the 50. We're down here. But if you notice, this 161.8 fib extension had this was drawn from prior levels from up here. So from up here. So it's funny how like the market kind of came down to it, but it reversed just above the 38, the 38.50 range, just above that at the close. So these levels do mean something. These little bubbles right here are the 2 ATR. So if you notice, here it kind of came right to it. It went back up to the 21 yesterday, and then it broke through, and then we kind of closing right in that range right there. The 8, it's crossing down through the 21. So that is not a good sign. We had a little bit of a nice stacked kind of scenario going on here, and then we're starting to get the beginning of a spaghetti look. We gotta get this mess here, and then we might start trending down. I don't know. Maybe this kind of held here, and we bounced a little bit higher from there. See how I delete this. Oh, sorry. Here we go. So make it a little bit balanced, and we go higher from there. Also, we're coming up to the mid-end of the month. The so-called Santa Claus rally starts on the 23rd. It goes from the 23rd of December to the 6th of January. That is the quote-unquote official Santa Claus rally time period. If we do get a rally, it's going to start on the 23rd, give or take, but that's roughly when the Santa Claus rally officially is on the way, the 23rd. So we might get some more chop action, we might get some more down days at the beginning of the week, maybe Monday continuation from Fridays, down. We were down 43 points at the close, but at one point we were down like 65 points on the S&P. So a nice little bounce, and here's the bounce right here. Little, not really a hammer candle. This is a hammer candle when you have like a big, wick, and then you close, somewhere right here at the end. That's a hammer candle. This one right there. If you can take a look at it. I don't really see any other here. That's a hammer candle also. And we did not get a continuation of that one. So this uptrend has been broken. See if you notice I have the line on there. We're hitting higher highs, higher lows, higher highs, higher lows, and then boom, this day we broke it. We broke it right there. So the continuation has ended. Kind of look, at this scenario where somewhere around here, 39.50 is going to be another area of resistance, which kind of makes sense because it will be back up here on the 21, which is this little aqua blue line. It's coming back up to that retracement level, at 39.45, and then the next level is that 61.8 retracement, which is at the 4,000 level. It's funny how those numbers kind of work out that way. It's the way it happens to be. You can't really predict it. It just happens to be that way. And if you notice the 61.8, this 161.8, it's right at the 38.50 level. Close enough. So these numbers kind of have meaning to them. The 127 is at 3,900 and so forth. It just happens to work out that way. So we'll see. We'll see if we get a bounce. And we get a little Santa Claus rally. Even if we do, I don't see us going back up here to 4,100. That's a big jump. That's like another 300 points. Maybe we do. And then in January, so goes January, so goes the year, as they say. So if we have a down January, the probabilities of a down overall year are more likely than not. If we have a positive January, we might have an actually up year. It might look like we might have one because from what it seems, we are entering the latter stages of the Fed rate hikes. We had one in December. We're at 4.5. They want to go to 5.1. Around there, it used to be 5, and that's 5.1. So maybe another one in January, another one in March, and so forth. And then let's see what happens after that. Maybe they ease up after that, and then we take off. I'm not in the predicting business. I'm looking at price action. So if I see price action start clearing certain levels and another uptrend continuing, then I'll be more bullish. Right here, when this hit and we went up, a nice little hammer candle right there, then the continuation was higher. We came back down again to test it, hit the 21, we went higher. We came back down to test it, hit the 34 3 or 4 more times. You have one more rally, and if you notice, they hit right here at 4,100 both times, here and here, right at 4,100, 41, right, 4,100, 41, 0.01 kind of thing. So this number is going to matter again. So if we do rally, expect this to be resistance one more time until we break it. So until we break it, we're not going to have to continue. So this has to, again, clear back this level, get back to the 4,000 level, clear it, and then start trading in the 4,000 level for this trend to continue higher, and then this to be broken to the upside. Until then, we have a new channel going down. So we might do this if we don't get a Santa Claus rally. So again, just not speculation, just looking, at the price action. If this, then that. If this, then that. If I see this break right here, and then hit his head and not bounce lower but continue higher, then if this, then that. Simple as that. If we do this and then we get this, then this channel is prevalent, and then these higher highs are shortable right here. Okay, that's kind of what I'm looking at here on the overall market. Let's let me look at the Qs, which is probably going to be the same thing. The Nasdaq. See this trend right here. It's a little bit stronger as far as holding, but they're much lower. They're in much lower time frames. And again, these right here were stacked to the short side, so these uptrends are coming up from the short to resistance levels at the 84 moving average. And if you notice, it kind of like hit his head and it traded around here, but then it never really sustained. Every time we went up, it came back down again. Every time we went up, it went back down. We got to clear these levels for it to go up again. If you notice, the 8 has crossed all of them. So we're getting a spaghetti look where they're not stacked nicely. See, this is nicely stacked to the short side, obviously. So these are all shortable rallies. If we have, this little 21 bounce here, this was shortable right here, and then we get this little bounce. We get this little right after the 55, this 2 ATR, you short it. Then we didn't even get back to it, you short it. Then here, we hit fake, came back down. head fake, came back down, head fake, came back down, head fake, came back down. So we went into this little range here where it was just chop action. Now we broke this little trend. If you notice, these little 2 ATR levels hit right to it, and it went a little bit higher. So now this level needs to hold, which is that 272, 270 level. We're at 274 on the Qs. So we need to hold 270. If we hold 270, then we can get back up here to these levels here at 285, 289, and then eventually, if you notice, where these levels come to, right to before 300. We didn't even get back to 300. Again, these psychological, century mark levels are key to have to be cleared before anything sustainable. This little level here, if you notice from back here, these levels. If you notice here, here, and then we never got back to here again. And even this level right here, where's that at? That's right here, right at the 300 level. You go a little further back in action. You just notice here how we kind of hit our head here, came back down in size. So these levels matter, guys. So these key levels matter. So again, that's kind of what I'm looking at on the indices. Again, we might come down all the way to 268 around here, 267, 268, and still be this uptrend kind of like continuing. Let me see if I could this channel here is kind of like somewhere right here. But if we want to actually draw something on this side, something like that, I don't really like that. Something like this. We kind of hit this level here, and this level here. So this is kind of the channel that I'm looking at. We might go up again. Here we go. If we go back up again, where are we heading? Where are we going, guys? That 300 level. See how that works? So again, 300 is going to be a level to clear. That's going to be still 300 more points on the Nasdaq with 30 points in the Qs. So as long as we stay in this range, we're just going sideways, and then sell premium here, which I've been doing on the XSP. So that's the indices. The watch list, the filter watch list, we have 36 stocks. These are it right here. This is what you guys are gonna get on the email. I sent you this. So we'll go over these one by one real quick. But I wanted to take a quick look at NVDA. Shout out to John C. He gave me this idea, and then I'm gonna take a look at it, see what I'm looking at. He mentioned on the weekly. Here we go. He saw a gravestone doji, which I saw it as well. A gravestone doji on the weekly. Here it is. Basically, a gravestone doji is the inverted hammer candle, where this is a hammer candle, which normally implies a direction change, where you're going down and you have a hammer candle. You normally have a move from there. Now, the hammer candle is a little bit more prevalent when you're coming up to a prior resistance or a key moving average. Let me see if I can kind of see something here. Here we go. See if you notice here. Okay. Let me take a look at it. Let me take a look at this one right here. See here? There's a hammer candle right there. That's a hammer candle. Okay? And what did it come up to? You came up to right to the 55 and right to the 2 ATR. This right here is my 2 ATR. So that's a good strong signal. When you have either a sideways or a downtrend, we have a little mini downtrend here, and then you get this hammer candle at a key support level. That's a good buy right there. You buy right when it breaks the hammer candle, and it happens to be a 21. It gets above the 21, boom, you have a nice little rally. So from 129, let's say, to like 150 something, you have a nice little move there of that hammer candle. So those are really strong indicators when you're coming off a key support area. Okay. This one right here was kind of a little hammer candle as well. You're going down a little bit, you go up, you come down to this little prior, that one hit, and then boom, take off a little bit. Another hammer candle right there, hammer-ish candle to a 21, came back down and close at the high end, boom, we take off. So this one didn't really work. I mean, it did kind of give you a little bit of move. Let's say you would have bought it right here at 180, 181. You took it to like 195. You still have a nice move. But if you notice, there was no support area. If you want, let me clean this up. If you want to kind of give it a support scenario, if you want to kind of like, you get this top right here, comes in with this top, right? So you get this top right here. And then if you have these two ATRs, so it kind of came to a little support area, kind of scenario where you got a little bounce. You have another little hammer candle here, and it takes off. So I'm digressing, but that's kind of like the hammer candle. Now in this scenario, this scenario we have an inverted hammer, which is called a gravestone doji. So that's kind of like the other way. That's kind of when you go up and you have the reversal, and this normally gives you a short signal. Now, it's kind of a level of importance here. This little retracement here. It kind of it hit his head. It hit his head right here on the 84 and on the 55. On the way up, it hit it here. It broke it. A little head fake and came back inside. So it's got some validity to it, some strength to it, but I would like to see this like 165, 164, a range broken. Again, this is on the weekly, guys, okay? I'm looking at it on the weekly. On the weekly, if we break the 165, which is the 34 period moving average, if we break that, it could be shortable. But then you also have the 21 and the 8 coming in here. And let me clean this up. And if you notice, the 8 is crossing over the 21. So that's a positive sign. So there might be a little bit of support right at that 158 area. So you might have a little bit of a chop action here, when you kind of go sideways for a little bit from that 160, 170, 165 range to that 150 range. So you might have a little shortable event here from like 164 all the way down to like, 158, 155, maybe even 150. And I'm thinking we're going to get support at 150 here because we have this 161.8 retracement should offer some support. And also you have the 21 and the 8 converging in this area. And then you have previous buys right here. So this could be a level that it could be supported at that 151. So you might have a 15 point, shortable event here on the daily. So nothing. I wouldn't think we go back down to 112 again where you really make some money. I don't think that's going to happen on this chart. Let's look at the daily. The daily, we are kind of like. We have a 1 day squeeze here. We kind of have a little choppy action on a squeeze here. Where we got a squeeze and then we kind of almost fire and then we kind of came back down again. So, I mean, on the daily, this looks bullish, right? On the daily, looks bullish because you have this uptrend. You have stacked DMAs. They're nicely stacked. The 8 on top of the 21, on top of the 34, on top of the 55. And then the 84 is kind of coming across where the 55 is crossing it now here. So it's getting to a point that that is looking to be a positive uptrend. Well, we'll definitely have an uptrend. I mean, you can see price action coming down and going up, coming down and going up. We have higher lows and higher highs. So that's the definition of an uptrend. The 8 is coming down a little bit, but again, the market's been choppy, and we kind of right at the 21. So would this be a buy at 165? Or would this be a short at 164? I don't know. Tough call. Since it's kind of like a tough call. Me personally, I wouldn't do anything with it in either scenario. You have this over here needs to be clear for it to be on the weekly an uptrend, and then this over here this scenario 154 on the daily has to clear. But then again, like I said, you got the 151, 150 range here that is going to probably offer some support. So I'm thinking we're going to go in this range for a little bit. That's kind of what I'm thinking. Again, if you want to short at 164 and cover at 155, you're still going to get a 9 point move. So I mean, it's still a nice little swing trade. But I don't think you're going to get much more than that. I don't think you're going to break the 150 level based on what I'm seeing in this chart here. And then maybe at the 150 level, that will be a good buy. If you see it come back up above 152, then we'll make a little run again. Again, we got the beginning of a squeeze. We have a 1 day squeeze right now. Right now we have a 1 day squeeze. So if this stays in a tight range right here, I'm more likely to long this if we break above the 21 here and the 8. I'm more likely to if the squeeze starts firing to the long side. If we break down, then the squeeze probably going to fire to the short side, and then you might have a short here. Maybe you want to cover at that 151, 152 level. Okay, so that's kind of like my in-depth assessment. Let me take a 5-second look at a lower time frame, see if we're looking at anything here. 30-minute. Let me look at the 30-minute. So the 30-minute is definitely in a downtrend. Obviously, it's obvious. You have this downtrend, but it's kind of finding support here. We're nicely stacked to the downside. You got some, we were trending higher. We went sideways for a little bit. We broke the 21. And once we break the 21 on the downside, see, right there, we fired short. You see how the red momentum bar kind of took over on this day right here. So you have a little bit of a head fake, and boom, you gap down, and boom, the green arrow, the green dot is when it actually fires. So you fire short on this day, and then you went much higher here from like the 172 to the 165 area. So you still have a 12-point shortable event here. Again, we might get some resistance in the 170 if you start going up again. If we break, and here we go. If we break that 164 range, which is back on the daily, back on the weekly I was mentioning, if we break that, then we definitely go lower. And then when you cover right at 168, 169 around there, maybe 170. It's kind of like you cover if that you're wrong. But again, you're looking at maybe a 5-point risk to the upside, 6-point risk to the upside, to like a 9-10 risk to the downside. Me personally, it's just kind of like not enough for me to kind of like bite either way. It's just going sideways. I need to see a little bit more of a trend. If this right here was doing this, and then even if it held here and it kind of went higher, then that daily squeeze, then this daily squeeze will be more prevalent. Where if it goes sideways for a little bit longer, then I'm a buyer close to the 21 for a pop higher, from 165 to 185. It's a nice 20-point move. I'd rather have a 20-point move to the upside. I'd rather take a 20-point move to the upside with maybe a 2 or 3-point risk to the downside than to take this 164 short, to 150, maybe a 6-7 point to the downside with 5, 6, 7, 10 points stop to the upside, like a 1-to-1 ratio on the short side, where I might have a 1-to-5, 1-to-10 ratio on the upside. Again, that's just price action. Look, see what it does. I mean, it's right at an inflection point. If it starts going sideways for a little bit longer and it doesn't do anything, then you go back to the weekly. And then this little candle is going to hold, and if this holds and you break this level 182, then you have then you continue this trend. Now this move here needs to be digested. Okay, this is a nice strong move from 112 all the way to 180. That's a big move. This is a big move. So sideways action would not be anything wrong with this. And that's what I was saying on the daily, that it looks like it's going to be some sideways action even on the weekly from that 175 to that 150 range. You might have that 20-point kind of sideways action before eventually going higher. And then you have earnings on February, so that could be a catalyst to push it higher. That's what I'm looking at. Take it with a grain of salt. I pretty much digested it as much as I possibly could, and maybe a little bit more than I needed to. But that's kind of what I'm looking at. I would probably say this is going to go sideways in a 10, 15 point range for a while. Maybe a quick day or two, short might be, but I wouldn't see it. I wouldn't think this long term where we go back down to the 130s, 120s. I just don't see it. And if we do, hey, listen, we do, and then obviously you're going to have triggers. You're going to have things breaking down, and then you have alert. You're going to have entry points where hey, if you break 163.90, 163.88, something like that, you might be able to short it to the 155, 160 range and make a 5-point move. But then you also have a 5-point, stop. So it's like a 1-to-1. That's what I was saying. So again, I'm digressing. So let's start with this filter watch list. Let's go through them, pretty quick, as quick as I possibly can. Okay, first one, ELF. Okay, we got a squeeze here, right? We got a squeeze here. It's kind of like indecision candle right here, sitting at the going sideways for a little bit. That's the squeeze. I'm gonna raise my alert to that 54 range, 54.20 range. So if it comes back inside this little range here, I'm a buyer. I'm a buyer at 54, 54 range right here. And my stop is gonna be right here at 53.48 around there. Or if I see this kind of shoot from blue to yellow or red, then I'm gonna stop out. But this is nice. This is nice. Or another thing you could do is you could draw this little trend line right here. Something like this, and then create an alert. And then if this breaks this trend line, then you're a buyer here, and then you have to stop right here. So this is nice. That's why this filter list kind of gives you exactly, it kind of chooses it for you and gives you the right kind of setup. You have a trending stock that's shooting higher. It's digesting this move right here, right? You see, this is a strong move, guys. This is from 44 to 56. That's a 12-point move on a $40 stock. That's a great move. So now it's got to digest it. It's got to go sideways for a little bit. That hence the squeeze, right? You have a 1, 2, 3, 4, 5. You have a six-day squeeze. It's beautiful. It's right in the sweet spot. I'm a buyer at 54, guys. 54.50. I'm a buyer, and I'm stopping out. Below 53. 70 around there. I won't even let it get to this level right here. 21 is my friend. Okay, and if it goes higher, what am I looking at here? Let's see what this can go to. This is the recent high. The retracement here. So this can go to 58. So if I'm a buyer at 54, where's the ATR? Listen, this stock moves on an average 1.5 points a day, right? So the squeeze is saying that it normally moves 3 points on a fire squeeze. That is perfect. That's exactly what I'm looking for. I'm looking for a 2 times ratio. So when it is in a squeeze, you have a 2 times ratio of ATR. The gold, which we're getting a gold, this is the pro, remember? This is the pro. So you guys don't have this. You guys just have the red dots. On the pro, I'm getting the beginning of a gold, which is perfect. And it's a little bit higher probability squeeze. So if this squeeze fires, I'm going to get about a 3-point move. From 54 to 58, that's a 4-point move. That's exactly what I'm looking for. It's exactly what I'm looking for. So I'm risking 1 to make 4. That's trading. That's what I look for. Simple as that. I'm risking 1. I'm getting out at 53.5. If I buy at 54.5, I'm risking 1 to get out at 58. That's it. Simple as that. I'm risking 1 to make 4. This happens 70% of the time. 75% of the time, this will play out to fruition. And if it doesn't, I'm risking 1. And if it does, I'm making 4. Okay? That's simple as that. All right. So that's the very first one. I won't take as long as the next ones, I promise. All right, the next one. Oh no, this is the buyout. When this happens like this, it's the buyout. So moving on. Okay, this one right here. I don't have a squeeze on this one. It's too extended, so I'm gonna put my alert right there. I'm gonna look at it at 63. Right now it's too extended. I'm only gonna look at this if it comes back inside here and this becomes a squeeze. I have green dots. The squeeze fired back here. If you notice, this is when the squeeze fired. Oh shoot. Um, right here. This is when the squeeze fired. Right there. That green dot. That's when it fired. Okay? Right there. Boom. What do you get here? You got 40 to 50. Let's say you have a 10-point move. What does this move on average? 4 points. What does the squeeze tell me? 11, 12 points. What did it move? 11, 12 points. There it is. There it is, guys. Simple as that. Love the squeeze. All right. So I'm not doing anything with this until it comes back in here and I have a squeeze. Next. Let me get myself in this. Oh, sorry. Okay. Next. This one right here, it isn't a squeeze. It's kind of setting up. I do have buy signals on the big 3 indicator, these little green arrows. So I put an alert here in the 34, but I'm pretty much, it's 590. 590 is right at the 21. It's kind of right there. So you know what? Since this is kind of like a pretty large moving stock, I'm probably gonna put an alert right here. If you notice, you have tops here, so I'm gonna put an alert. I'm gonna give myself an alert right here. Trend line, right there. So I have this, and this to clear. If this clears, I'm a buyer. Since it kind of broke the 21, see a couple of hammer candles. These hammer candles are important because they're coming in at the 21. So for me to get a trigger alert to be a buyer, it's got to break the hammer candle, right? It's got to be above it. So I'm a buyer. I'm a buyer of 598. Taking it, probably all the way to 630, 640. It's a 30-point move. I'll take that any day, twice on Sunday. Actually, Saturday today. All right, here we go. The next one. All right, hammer candle, little hammer candle on the 21. I like it. I have a 2-day squeeze. I need a little bit more. There's a little squeeze right here. A little squeeze right here. This little area right here. It's gonna shoot up, came back down again. I got buy signals on my big 3 indicator, so I'm liking this. So it's a 43. You know what? If it clears 43.78, I'm gonna be a buyer here. Put it at 81, and or if it comes back inside, like 42.85, I might take a dab at it with a stop right at 42.28, which is the low of these 2 candles. So I'm a buyer here at the 21 with a stop right here, or if it goes higher, I'm a buyer here with a stop there. Okay, that's kind of how we treat this. And then what's my my target? My target is 48, around 48 range right here. So if I'm a buyer at 43, let's say 44 to 48, that's a 4-point move. This thing's moved in a day 2 points. There's my double. Okay, there's my double. So I'll have a 2 times ATR move, which is like right about a good resistance level. So I'm probably taking some profits here, and then maybe the next level is like that 50 range, and then I'm risking let's say 42.10 is my stop. If I'm a buyer of 44 or 43.80, so I'm risking 2 to make 4. 2 to that's a 1 to 2 ratio. Not ideal, but maybe my stop will be a little bit low. If I'm a buyer here, I might get stopped out at the 21. So 42.60. So if I buy at 43, I'm risking about $1.10 to make about 3.5, 4. Give me that 1 to 3 ratio. Okay. All right. Next. I'm trying to go a little faster. I don't like this. It broke the 21. It's going lower. Yeah, I'm in a squeeze, but I have a little red here. I have a little sell signal. My big 3 buy signals have stopped. The 8 is coming down, broke the 21. It's back to the 50. I don't like this. I'm only going to look at this if it gets above that 105 range. So I'm going to put an alert here. So if this gets above this, then I'm going to take a look at it. Okay, next. EMR, it's kind of right there, squeezing. I have a nice long squeeze right here. I don't have any buy signal on the big 3. I gap down and get back down again. It's kind of going sideways. What am I looking at here? 1.93. Still giving me that 3 to 1. It's got to break. This might be a play at 100. So I would say right here it's a 95, almost a 95.51. 95.51. I might be a buyer at 95.51 if it breaks above yesterday's high, and then I'm stopping out at 93.78. 93.78 will be my stop. So I'm thinking about a 95 to 93. So I'm about a buck and a half risk to, let me see what my ratio looks like. Where did I see it? Right at 100. So if I'm a buyer at 95 to 100, that's a 4.5 point move. So 4.5 point move, and I'm risking 1, right? 1.5. So there it is. That 1 to 3 ratio. I like it. So there's my alert. If it happens, I'm a buyer. Next. This one right here is kind of like, I don't have a squeeze. Okay, it's green dots. I need to see red. Well, for you guys, it's red. For the pro version, it's black, and I get black and blues and reds. And then it fired right here, boom, and it came back inside again. So, I need the squeeze to set up again. If I don't have a squeeze, I'm not buying it. So moving on. I have a squeeze, multiple day squeeze. Okay, right here. I do have a fresh buy signal on the big 3 indicator. On the I'm getting this normally moves 2.8 average. I'll go to 4 on a breakout, so it's almost two times. I have an alert here at 68. I would say 69.71s. If it breaks up here, it's already extended over the 8. So I'm going to say right here. I'm going to say it's got to break over 70. If it breaks over 70, then I'm a seller at 68.44. So I'm risking a buck and a half, right? So I'm gonna risk a buck and a half. And put the alert right here at 11. So I'm gonna risk $1.50, right? And let's see if it's worth it. $1.50 to 78. So if I'm buying at 70 and I'm selling at 78, that's 8 points. I'm risking a buck and a half to make 8. I like it. Okay. Now I'm gonna squeeze. I have a fresh buy signal. I'm in a sweet spot. That's like a no-brainer. It's like I pick this, every day I could possibly get. I have stacked DMAs. They're stacked nicely. It's coming out of resistance. Broke out. It held it. It's going sideways. It's digesting. If the market gives me a few little days of rally, this I can go to 75, 76, 77, 78. I'll start taking partial profits. 4 to 1. It's a 1 to 4 risk ratio. I'm a buyer. I'm a buyer above 70, 70, 11. All right, that's it. Simple as that. Next. This is the beginning of a squeeze. I got a 1 day squeeze. It's below the 21. It's coming in. It's supporting itself right at the 68, 61.8 retracement right here. It's coming to the 34. Yeah, but it's got to break above 118 around there, but then my stop will be down here. Just risking too much. Not interested. Moving Deer, I don't have a squeeze. I don't have a squeeze. There's a dividend being paid. You know, at the end of the year, so nobody wants a dividend paid. That the stock kind of goes down the dividend amount. So this is not anything I want to touch right here, right now. So moving on, CMAC. It's breaking down. It's breaking down. I do have a squeeze, but look at that. Look how long the squeeze has been. It's just basically going nowhere. Grinding higher, but I have a 1.4 normal moving at 1.4 a daily, and if the squeeze fire is going to 2.46, 2.44, 1.94. So basically, this is going to like 2.5 points. If it fires, 2.5 points for me. I don't get up for 2.5 points, so I'm moving on. Next, ACLS. I do have a squeeze. It moves 3.5 points daily. I got a 5.5 point move on a black dot right here, on a red dot. I got a 5 point move. I like a 5 point move. It's right here at the sweet spot. I'm gonna put an alert right here at 80. So if it comes down, I'm a buyer. Okay, if it comes down, I'm a buyer. And then 82.67 could be another trigger for if it does break out. Okay, if it breaks out, it's got to break this level here, and then my stop will be 80. So I have a 2.74 stop if I take the breakout, and if I buy right here, my stop is $1. So let's see where my target would be. My target's gonna be 91. So if I buy it at 82. If I buy it at 82.80 around there, I'm gonna go to 90. So it's about a 7-8 point move. 7-8 point move to a 2 point, stop out. So I'm risking 2 to make 7. That's not that bad. That's more than 1 to 3. If I'm risking 2 to make 6, that's 1 to 3. I'm probably gonna make 7 or 8 if it does play out to fruition, if the squeeze fire is long. So I will be a buyer at this range because my stop is at 21. So I'm a buyer here. It's a much lower risk entry. So take this one out. This is kind of like not relevant anymore. And this one I'm leaving it because it's way down here. So like I'm a buyer at the 80, at the 80 range, 80 and a half, 80 around there. I'm a buyer because it's between the sweet spot, and the 21 will be my stop out. So it's a lower risk entry. But if it doesn't give me that opportunity and it breaks out, I'm a buyer at 82. I have a stop, somewhere around here below Friday's low. I'm risking $2 and then if it does break out, I'm taking profits at 85 and a half. So that's 3 points. And then I'm moving my stop up. I'm breaking even. And then my next one's at 90. That's how I would play this. All right. I hope that makes sense. Moving on. Okay. BDD. Way too extended. I don't have a squeeze. So I'm going to put an alert right here. Why right here? Because there was prior movement around this price range, and it's right in the sweet spot, and I don't have a squeeze. So it needs to come in, go sideways, and then I'm a buyer. So I'm moving on. All right, this one right here. Ooh, I have triggers here. I have triggers in this stock. When you see the little green dots here on the pro version, this is gonna move. This is about to fire. I want to see an aqua. An aqua means it's gonna be a little stronger move. So this looks pretty good. But this moves 10 points in a day. I get 2 to 1, right? If I do break out, it goes about 22 points, 20 points, and if I have a gold, I had a gold right here, it goes 36 points. So this is not bad. So where do I want to be a buyer? I want to be a buyer on the upside if it breaks above 354.41, which is about the close of the day, or if I want to be another buyer at 352. So I want to be a buyer right in this range. Now, if I'm a buyer at the lower end of the range, I'm stopping out at 349. If I'm a buyer here, I'm stopping out at 349. So I'm risking about 5 points. And 379, about 20 points. I'm risking 5 to make 20. Okay, I hope the math makes sense to you guys. I'm risking 5 to make 20, even to make 15. That's still 3 to 1. Okay, and it's in a squeeze. I don't know. I do have a sell signal on the 15 minute. I just noticed on my big three. So let me take a look at the 15 minute. The 15 minute, I just got a sell signal at the end of the day. So it's got to break this level right here. So I'm probably not gonna decide not to be a buyer at this level, because if it breaks, look at this, guys. This is my new stop right here. That's my stop. If it breaks this level right here, oh geez, sorry about that. If it breaks this level right here, see, notice how it kind of like it's gone sideways here. If it breaks this level right here, then I gotta stop out, which is 351.50. So I'm risking less than a point on a $300 stock. I'm risking less than a point that if I'm a buyer at the low end here, and if it breaks this little range right here, let's say 351, 350.88, I'm stopping out. And if it breaks out, then I'm looking at that, a 15-point move on a $1, $2 risk. That's pretty damn good. So let's go back to the daily. All right, so that's kind of what I'm looking at on that one. Moving on. This one, it's a little bit sporadic. I do have a squeeze, but I have a dividend coming in. It's just too sporadic. I'm gonna pass on this one. Okay, this one looks pretty good. I don't have a squeeze though. I don't have a squeeze. So nothing to do here. I am gonna put an alert. Near the 21. So if it gets near the 21, I'm gonna get alerted. And if I do have a squeeze forming, I might take a look at it. Another thing I'm gonna do also is I'm gonna draw a little trend line here, right? Something like this. I'm getting this high right here, this high and this high. And then if it breaks out, I might be a buyer on that breakout, with the trend line being my stop out and the A will be my stop out. Okay, moving on. Trying to go a little bit fast. Sorry, this became longer than I thought, but I hope it's good educational for you guys on what you have to go through mentally in the process, and what you're looking at on the weekend. You take this extra time on the weekend to go through this, and then you're set up for the week. So when you get your alerts, the work has already been done. You already did it. We already went through the analysis. We already did the game plan. See, every single one I have a game plan. If you notice, I'm talking about when I'm getting out on both sides. When I'm getting out on the stop out, and when I'm getting out on the profit. So I have a game plan going in. I'm not buying something blindly and think, oh, let's hope this works out. No, I know exactly what I'm doing before I put the trade on. I know where I'm buying, and I know where I'm getting stopped out, and I know where I'm taking profits. That's it, stress-free. Just that simple. If this, then that. Okay, this one, ADCO. It's kind of breaking. It's not necessarily breaking down, but I don't like that it kind of broke the 21, and it kind of like have a high wick here. I do have buy signals. I got the beginning of a squeeze, but I only have a 2-day squeeze. I like for a 3 to 5 day squeeze. So just because of that, I have an alert at 130. If it breaks above the 21, I might be a buyer. If I have a 3rd or 4th day squeeze here. So right now, that's my alert. Next one. I don't like this hammer. I don't like this at all. This is definitely. I'm not even taking 10 seconds in my life looking at this. It's a hammer candle with a red hammer candle off a moving average. So this could be. If it breaks out from here, it could go up. But I just don't like these last 2 days kind of gapping down. It's a big moving stock. It moves 8 points in a day. I'm not getting double. I'm getting double on the black, which is right here. I'm getting double on the black, right? But then I have a red. A red gives me a 12-point move average. It's not really 2 to 1. It's just not. I just don't feel for it. I have better options that I've shown you guys today and the other ones. So I'm moving on. Clack again. Sitting around here, I do have a little squeeze going on here. This moves 13 points in a day. It gives me a 20-point move on the red. It gives me a 17, 18-point move on the black. I got a black and a red kind of mix here. So I'm looking at 388. I'm looking at 388 to be my entry because I don't want to buy this and I don't want to buy this going down. I want to buy this breaking out. So I will not be a buyer here at 385. I'm not a buyer here. I got to see higher prices on this particular setup, just the way it looks. Okay, because where's my stop if I buy at 388? My stop is right here at 379. Again, it's an 8-point move, so it's an 8-point risk. But let me see if it's worth it. See, you got to put in the work before you make the trade, guys. You got to know all this. So 430, geez, okay. I'm looking at almost, I'm almost 45 point move potential. So even at 400, even if 405, even somewhere in the 410 range. So if I'm a buyer at 388, let's say 390, and it goes to 410, that's a 20-point move. So I'm risking 8 to make 20 on the low end. You can go even higher. So even, let's say 410. Let's say you want to get out somewhere right here at 410. You're risking 8 to make, to make 25 points. That's not too bad. But again, on something like this, I wouldn't buy like 500 shares. I might buy like, 100. I'm risking $800 to make a couple thousand. Or I might buy at 50. So you risk $400 to make, $1,500 or $2,000 around there. All right, so that's kind of how I would play this. But I wouldn't be a buyer on a dip. I wouldn't be a buyer on a breakout on this particular setup. Moving on. Don't like this. 3-day squeeze. You have a dividend coming in. You have a nice little. You have a. Sorry. You do have a hammer candle. You have a hammer candle here, but it's below a 21. Have a 3. It moves 3. It moves 3. I'm gonna get a 5. Not really interested in this. Moving on. JBL. Don't like this. I only have a 2-day squeeze. On earnings, kind of gap down. It's kind of holding. Hasn't gotten above the 21 here. I'm not doing anything with this. This one is kind of holding the 21. Oh, look, perfect example. 66.60. It kind of held the 127 extension. It went up. It went all the way up to this. This was done prior. See, it kind of came. It kind of went all the way to this 161.8 extension. It went to 70, and it's retracing back to the mean at 21. So this could be viable, but I only have a 2-day squeeze. I only have a 2-day squeeze. So. Just it is nice. It is nice trending high, but I want to get this one. I will buy on a retracement. I will buy on a retracement here. So 68, 66.88 around there. Anything inside 67 flat, I might buy it. And where's my stop? Right here, 66.46. So I'm risking like 50 cents. I'm risking 50 cents to make 4. That's basically it. There's 4. From 67 to like 66, 67 to like 70. 3.5. So that's kind of how we play this. I wouldn't play this in a breakout because this breakout is already extending above the 8. I am not a buyer above the 8. I do not buy above the 8. And I do not buy below the 21. I only buy between the 8 and the 21 if I have a squeeze. That's a hard rule. Simple. I keep things very simple. Okay, like here. See? You came inside. I'm going to squeeze. Right? I got a squeeze here. I got black dots and then a little bit of red dot. I'm going to squeeze here. I'm a buyer right here. Somewhere in between the 8 and the 21. So I'm a buyer at 65.50. This sucker went to 70. There's my 5 points. You see? There's my 5 points. And where was my stop? My stop was below this day, 64.88. So I buy at 65.50. I have a stop at 64.88. I have a 70-cent stop. I'm risking $1, and I made 5. That's what I look for. Okay, here I'm not a buyer here. I have no squeeze. I don't have an entry. Again, it can go on without me. That's irrelevant. Okay, it's irrelevant. I don't have FOMO. I'm looking for my setup because this setup works 75% of the time. When you have a squeeze and you have your right sweet spot entry, this strategy works 75% of the time. And normally you have a blast off. Again, and you have a defined stop right here. That's my stop. right? I'm risking $1 to make 5. I take that any day, twice on Sunday. Let's continue. This is way extended, right? Way extended. I have a squeeze. The entry would have been right here, right? This would have been the entry, where even I don't have a squeeze here, so I wouldn't have entered here, but I had the beginning of a squeeze here. I'm still in a squeeze, so somewhere around here would have been the entry, but I probably would have put my alert closer to the 21. And what happens here? Boom! Look at that, guys. It pegged the 21. That's how you know you have a strong stock. It just pegged it, and then boom, you went higher. So you're a buyer right there. Let's say you're a buyer right here at 86. You're a buyer at 86. The stock is at 89 right now, and the squeeze has not fired yet. You have not been. You're still not fired. When do you know you fire? When you have green dots. Green dots is when the squeeze fires. Okay, like here, this squeeze fired right there on this day. See, it kind of went sideways and then boom, it took off. So this has not fired yet. So this would have been the entry. We missed it, but that would have been the entry, 86. It's too extended. I'm not doing anything with this right now, but I am going to put an alert right there. If this second comes back inside, somewhere around 86.50 around there, I say 86.75, I'm a buyer. Because where's my stop? Right here. And then potential, maybe even 100. 95. So if I'm buying at 80, let's say I'm buying at 87. If I'm a buyer at 87, it goes to 95. I'll take that because I'm risking, 1 or 2 to make 5 or 6. Moving on. Okay, I got a few more to go. Not too many. Got about maybe 10 more. I'm gonna go faster here. Little hammerish candle here. At the beginning of a squeeze. I'm not touching this. Moving on. This looks okay, but I don't have a squeeze, right? So I'm gonna put an alert right here. So somewhere around 12.90. Because again, this moved $2 in a day, guys. But it doesn't have enough history for but it moved $2. It moved $2. But again, if I'm a buyer at 12.90, where's my stop? Below 21, 12.23. I'm risking 60 cents to potentially make $4. Okay, so that's why this kind of will work for me if I'm a buyer here. Moving on. CDW. Oh, don't like this. Worth 21. It's pegging right at 55. But I have see this squeeze right here. See this right here, guys? You got a red momentum bar. It's firing to the downside. See, when you got blue, when you got aqua, when you have aqua, that means the momentum is it's strong. It's pushing off. See, the squeeze fired right here. The squeeze fired right here. You went long. When it goes dark blue, that means the momentum is dying off. So it goes sideways. See? When it fires red, red means down. Yellow means it's coming off the down and going up again, but still below zero. That's below zero, that's above zero. So this sucker right here, it's giving me a red momentum. I am not touching this. I am not touching this. If anything, I'm shorting it if it breaks, if it breaks 180, I'm shorting it because this can go all the way back down to like 170. I got a 10-point short and I have a 4-point stop. But I don't short stock. I'm not gonna short this, but that's kind of like what I would look at here. But again, I'm not touching this. I'm moving on. Lennar. You see the trend here. This big wick bar. That was earnings. So we passed earnings. Okay, I do have beginning of a squeeze, but it's way extended. So I'm a buyer 89.50. So it's got to come in. I'm not a buyer. This is too extended. I'm not following. I'm not chasing a stock. I'm not looking at this. This broke down. This is firing red. Moving on. Again, I'm taking a long time going through these because I'm teaching you my process. But all this I would have done in like maybe like 25 minutes or less. I would have gone to 30 stocks in like 15 minutes. I know exactly what I'm looking for. Okay, this one right here. I'm not really interested in this. If anything, it's got to break this trend line. Let me put this here I was looking at, and it's got to break above the 21. So anything above 90 is kind of what I will be a buyer. Okay, because you have it moves 3 points. I might get a 5-point move. I might get a 9-point move if it's gold. Right now I'm only getting red, so I might get a 5-point move on this. Not necessarily 2-to-1 from ATR, but if I'm a buyer here, my risk is like right here. I'm a buyer at 90.37. I'm a stop out at 89.60. So less than $1 to potentially make 5, 6 points, 7 points. So I'm risking 1 to make 7. You see the theme here, guys? Okay, Ulta. Don't like this. Oof, boom, 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 boom. I don't have a squeeze. Nothing going on here. Just in case, I'm gonna put an alert here. If it breaks above this little shelf right here, I might start looking. But my stop will be too low here. So again, just to kind of give me an alert what's going on with it. Not necessarily I'm gonna take action on it. This one right here. It's kind of have a squeeze, but there it is. I see red. I see a little red momentum bar. You see it? The momentum bar is turning red. So I'm not touching that. It's got to be above 0 line, and I see a red bar. So nothing for me to do in this one. End phase. This thing broke down. But you see how I pegged the 55? But again, I do have a squeeze. But it just moves so much. This is just so volatile, and it's below a 21. So I might put an alert here to kind of let me know that's above the 21, just to kind of take a look at it. But what's my stop? Way down here. I'm gonna have a 15-point stop on this stock, but for a 30-point move though. So it's 1 to 2. I might not necessarily do this. It's 16, 30, 35. So it's 2-to-1. 2-to-1 is nice. But I've gotten other, I've seen other setups that are much nicer. So I'm not really gonna waste my time with something that's just 2-to-1, which is still not bad. But I'd rather have 3-to-1, 5-to-1. I like this little trend line looking thing here. So I'm gonna put a trend line right there. So I like that. See, I like that. How it pegs. If you notice, this is kind of what I'm looking at. Okay, boom. Boom, boom, didn't get to it, then this one right here, then this kind of settled through here, and again here. So if it breaks this trend line, then I'm moving up my stop, but I'm not a buyer there. I'm a buyer right at 91. It's got to break this little level right here. So I want to see this one also break out, taken out, and then over here again, this one taken out. So I'm a buyer above 91.46. I'm a buyer there. And where's my stop? 89.73. So about 1.5 points, right? 1.5 points. What's my risk reward here? So worst case scenario, that 100 range, 98. So if I'm a buyer at 91, I got a 7-point move. 7-point move to a 1.5 stop. I'm risking 1.5 to make 7. I'm definitely going to take partial on 95. So if I'm buying 91, I'm taking 95. I'm still making 4 points on a 1.5 risk. Okay, I do have earnings, so we might have a catalyst for earnings prior. And I'm not holding it. If I'm a buyer, I'm not holding it to earnings. So I'm definitely getting out the day before, which would be 12:30. But again, if this breaks 91.46, I'm a buyer. You know what? I'm actually going to do this. I'm going to put a buy stop order at 91.51. Okay. I'm going to put a stop limit. I'm a buyer at 91.47. That's what I said, right? 46. And I don't want to buy higher than, 65. Let's say 20. Say, a 21. 91.71. So I'm a buyer in this range and for Monday only. So that's fine. Okay. So if this stock, and why I like it, because it have a nice little squeeze here. It's kind of going sideways. It's got earnings coming up, and that could be a catalyst. I have a nice stack DMAs, and I have my green dots. on the pro. I mean, this is about to fire, and I'm about the zero line. So I'm only going to risk, 1.5 points to possibly make 4 or 5. So I'm going to try with 100 shares and see what happens. If this breaks out of 95, I might be an additional buyer on 96 with a 94.5. Again, 1.5, and then to make to the 100. So that's kind of like my entry in this one. Okay, so that's that one. I got 2 more, guys. Sorry, 2 more. Okay, this one took off. See the green dot? It fired. So you have this squeeze right here, but again, it was spaghetti-like. I would not have taken this. This is something that I would not have taken. To see how I kind of give it all back. So I'm not even going to do anything with this. It's just not something I really want to look at. And then last but not least, keys. I'm not looking at this. This is 1 day squeeze below 21. I'm not even looking at this. So I went through 36 stocks. I don't know how long the video has been, but it's been a while. Sorry for the long video, but I hope this kind of gives you a really, really in-depth training and educational kind of mindset of what to look for and keeping trading as simple as you possibly can, guys. All right. I hope you guys learned something from this video, and have a great trading week. Have a good one. Put the work in. This is the business, okay? This is a business. Treat it as such. If you put the work in and you plan your trade, if you notice, all my trades were planned. Every single trade that I'm going to take, if I take any of these trades, are planned. I know exactly what I'm getting in. I know why I'm getting in, and I know why I'm getting out on both sides, on the stop out and on the profit taking. So I have a clear head. Everything is identified. There's no emotions. If this, then that.